welcome to LedgerCast. I'm Brian Krogsgaard. We got two folks with us today. One, you know and love, long-term co-host Josh Olswich. How you doing, Josh?
I'm a long-term holder of the LedgerCast.
And we've got the Anon Wolf is what we're going with. Old buddy of Josh's. What's up, Wolf?
What's going on, guys?
This is no wolf that you think you know. It's not Scott Melker. It's not the Wolf of All Streets or the Wolf of Poloniex or any of those wolves. He's the Anon Wolf. Been around for a while. Happy to have you. This episode is brought to you by Matcha. Not some episodes are brought to you by Matcha. This episode is brought to you by Token Sets. Go to ledgerstats.com/sets. We got no redos on this show, so this is just going to be how it is. ledgerstats.com/sets. Asset management for a DeFi world. They changed the tagline. You can do a lot of automated strategies, whether it's the DeFi Pulse Index or leveraged BTC or ETH. Lots of things that you can play with at ledgerstats.com/sets. Token Sets makes it really interesting to manage your capital with unique tools. Thanks to them for being our partner. Let's get to the main meat of the show. Josh, are we still crabbing?
Yeah, we're not. I don't think we're doing anything right now. It's really just low. I mean, volumes are zero everywhere. We're removing continents left and right. China's gone. All of Asia's looking to be gone soon. All of the UK is looking to be gone soon, and the US isn't far behind. So
Yeah,
there's an endless amount of regulatory stuff coming.
I saw Janet Yellen talking about stablecoins, Chairman Powell talking about how crypto has failed as a payments tool. So the U.S. is starting to ramp up some of their verbiage, at least. We don't know exactly what's going to happen in terms of regulatory sense. But, today there's this video of a steamroller rolling over Bitcoin miners. The government's just having a good time.
What was that about? I saw somebody posted that.
So that was miners confiscated in Malaysia.
Just add it to the list.
Well, we also have a New York hydroelectric plant coming out saying they make more money selling BTC than selling electricity to the grid. And we have another nuclear power plant saying that they're going to be mining BTC, right?
You actually have three.
Three nuclear plants?
Yeah, California, Ohio, and there's one other one.
Interesting.
So, yeah, Brian, I think it was last week or the week before, we were talking about somebody in law saying hey, look, it was that Seneca Lake thing or something, right?
It was, it doesn't matter if I say who it is. It was both my mother-in-law and my mother. Both were I saw this on NBC. What's the deal? And I was like, golly, how's this get so much bandwidth?
So you guys know what actually happened there, right? There's only a specific section where they're dumping the warm water into the larger body that's warm. It's not the entire lake that's getting warm. It's just this one specific issue, and then they're just worried that it'll start algae growth in the area. So they're going to be doing more research into the one specific area that's warming up, but there is one specific area that is warming up. It's not the entire lake.
I mean, as somebody who is from Michigan and Great Lakes are the best thing to protect, I'm highly protective of them, any lake, obviously. So I understand their concerns, but yeah, it was definitely blown out of proportion for sure.
Yeah.
From an environmental, it's just easier. It's easier to beat up on Bitcoin from that angle, right? That's the narrative. The narrative is we're boiling the oceans. That's been the narrative for years, I don't know. So there's just nothing good. There's what's the good news? Jack announced the Bitcoin thing. Okay. The El Salvador news seems to be tempered down. The most bullish thing I've seen lately is all these people coming out saying they've read this report or that report saying we're so bullish right now on on-chain analytics. And I'm just okay, you go ahead and buy here then based on that. 'Cause I'm just not seeing it. All right.
Well, before we get to all of that, Wolf, do you want to tell us anything about your history, or do you just want to be a guy with knowledge?
Well, I do think it's important. I learned in college the one thing that stuck with me: know your author. I think if any of the young guys who are listening, you should probably always keep that in mind when you hear information being told to you by someone. I'm a boomer. I'm over 50. Luckily, I was well off before crypto, so I'm a little bit different than most people. I don't really rely on crypto for wealth. I've been here since basically the beginning. It's basically Josh and 6 or 7 other OGs that sit in a private Discord, and we've done so for about 4 years now. We like to sit there because we don't like to, have to interact with a lot of the noise that you get on crypto Twitter and stuff. So we filter down a lot of stuff. I don't know Josh personally, but for the people who are listening, Josh is one of the few people that I actually do trust in the ecosystem. I always found his articles, while he himself is not super technical, always did the requisite research to, find out all the technical stuff. So I always appreciated all his BNC articles and stuff like that. And then Josh never talks his book in our Discord. So, of all the people that you can get advice from, he's not always going to be right. And I disagree with him all the time. But, he doesn't shill his book. And you can say that about very few people in crypto.
Yeah.
As for me, my strength is more on the macro side. Everybody can tell from my accent that I grew up in New York. I do not live in New York anymore because it's a dumpster fire. And my strengths are some of the strengths that you'll see from some of the other members in our chat, which is on-chain forensics and stuff like that. That's kind of where I got started. And I just wanted to come on to spice things up a little bit.
Nice. We're happy to have you.
So how do you think, have the narratives changed at all since you've started in crypto, Wolf? Or do you think it's just the same stuff?
No, I mean, it's definitely changed. I mean, if you told 2012 me some of the things that I read on a daily basis now, I would never believe you, like not at all. However, unfortunately, things are changing very rapidly right now. You did bring up the fact that in basically a month's time, we eliminated an entire first world nation from the ecosystem for pretty much, right? CL, the yellow cat, he had this tweet where it was like, Huobi's volume is as low as it's been in the spot market since October 2018. And I do get 2018 vibes from the current market: super low volume, super compression. We may make some new highs on low time frames, but we seem to be compressing in a very similar fashion to that Q3 of 2018, which is a little problematic. And from a macro perspective, if you remove all this liquidity, and I think a lot of people were focused on the mining exodus when they really should have been focused on the change of the derivatives market, right? The leverage has been basically cut out of OKX and Huobi at this point. Your Bybit had implement KYC. We actually saw Bybit's OI explode to about like 3.2 billion notional, I think. It's not even breaking $1 billion anymore as people have like fled that market. And we've basically been on top of the Binance regulatory issues. For the people who don't understand why Binance is a target right now, if you follow Ergo BTC or any of those OXT on Twitter, when they do all their on-chain forensics research for where a lot of the tainted flows go, they always in part end up at Binance, despite their compliance team, despite their partnerships with CipherTrace and chain analysis. They always end up at Binance. So when the Colonial Pipeline hack thing happened, the US government went to Silvergate and basically said, the friend of our enemy is our enemy. So either you drop them or you don't. And that's where we started now. And Binance corporate structure is extremely, extremely convoluted. So they've got to peel away at the onion layer by layer. And you're actually seeing that happen on a country by country basis right now. I would be very worried about grayish or blackish swan events. That doesn't mean it's bullish or bearish though, right? Because you could have a flight to safety. You could have a flight to safety in blue chips, BTC and ETH. I do think that your altcoins, your long tail altcoins are probably in trouble. But if, that's not bullish or bearish for blue chips. So, but just keep in mind that the macro scene is changing extremely quickly. And you just had a first world nation basically remove a ton of capital out of the system. That capital has to be replaced for us to get to all-time highs at some point. Where is that capital going to come from?
Yeah, that makes sense to me. I just popped up on the screen. you mentioned this feels a lot like the third quarter of 2018, and I wonder if we're kind of already in this zone, and if you were to make a comparative, picture, if we just kind of skipped all this, like we made the dump, like we made this dump off the top, but we just skip that and go straight into the compression at the the consolidation wherever it wants to be held. 30K is the new 6K. And like if we were to dump out of it, if we have some kind of capitulatory event and that marks a quicker bottom than we might have seen otherwise, do you think that is the type of thing that could happen and result from this? Is just kind of a quicker cycle as we cut out the middle part of the hopium?
Absolutely, I do. I'm sorry, Josh, did I cut you off?
No, you're good. I was just going to say, I saw people comparing BTC to ETH. Jack was talking about it. If you look at the 12-hour ETH chart, I'll pull them up side by side, but they are very similar to 2018. So even if you don't think BTC is similar here to ETH, or if BTC is similar to 2018, ETH is definitely similar to 2018 BTC.
Yeah.
And the cloud makes it pretty clear.
Yeah, absolutely. Because the last ledger cast I watched, you guys were focused on the 8-hour twist possibly being bullish. If you look at like a chart like ETH BTC on the 12-hour or the daily, I forget which one it is, you basically have this triangle that's going to resolve sometime at the end of August, early September, depending on how you draw the triangle in the wicks. I can basically see a compression on super low volume for a long time. And I've been telling people in our Discord, go do something else, learn to program, learn a new language. It's probably going to be pretty boring for the next month. But in terms of LedgerCast's question, do I think it may resolve quicker than, say, 2018? It does feel like it probably will resolve quicker.
Well, if I told you not to talk about our Discord, now everyone's going to be asking about our freaking Discord.
Listen, you're not getting in. You're not getting in anyway.
But yeah, this is just a giant descending triangle like it was. I was calling white coffee an accumulation here, and that eventually did fail. But there's a W here. This is getting denied at the cloud on the 12-hour over and over and over again. It's definitely quicker. It's twice as quick as it was if it's on the 12-hour than as opposed to the daily. But it's very, very similar. It rhymes, and we may see some sort of bottom pattern again here that may look like it's bullish, resolve up. And then, Brian, this is when we were walking, I think.
Yeah, it is. That's our 2018 conference walk.
At DC conference, I said, I forget what this was. Was this the coin ETF?
Winklevoss ETF rejection or somebody's ETF rejection.
Yeah, and then BitMEX just started selling off. I was like, this isn't that bearish. It's fine. It's a nothing burger.
Yeah,
but
it's like, everybody knew it was going to be rejected, and it's like just sell constantly.
Yeah. So if we're using this as a playbook, I would be watching on ETH this wick zone of 17 to 19 for some sort of answer in the near term, in the next week, definitely for something, right? W inverted head and shoulders. I don't know what it is, what it's going to be, but definitely look for that. But if 17 breaks, right? If this wick, like in 2018 BTC land, if 6K broke earlier, it would just go deeper, quicker, right? But it didn't, and we just kind of languished on and on and on. And for ETH, this may be like regulatory stuff for DeFi coming. I don't know, right? Like this was BCH civil war. This was Tether issues. This was legacy markets dumping, all at the same time in November 2018 for this BTC drop. I don't know what it could be for crypto. Maybe it's legacy stuff again, but it doesn't look great for ETH for sure until it's above that 12-hour cloud.
You know what I think will be helpful is Doge is kind of on its last legs of hopium, sitting at the 200-day moving average, sitting at prior daily closing lows, continues to ride this diagonal down. I mean, this just looks like it wants to end itself to me. Like, I guess it could do some kind of dumb bounce here, but it looks very bad. And, these people need to get cleaned out, to be honest.
Yeah, Wolf is definitely in agreement with us that just needs to go down to be healthy.
Yeah, I got to be completely honest with you. We talk about that a lot we do think it feels like Doge needs to be nuked and flushed out and washed out for us to, start the cycle back up again.
Yeah, I think like that weekly 7 cents for Doge at a minimum, and it's at 17 now. So like it's down however much, and it's another 2/3 down before it makes sense. Like just retrace that entire massive weekly pump right here at a bare minimum. But I could also see Doge going back to a penny,
and you could say the same about the AMC or GME too, right? Like those are starting to look weaker and weaker.
And I'm short those. I don't really have a great way of being short Doge, even though I look at this chart and it just looks atrocious. At worst, I would like to like sell calls or something like that. But yeah, I mean these look very bad. AMC even today, like it had tried to go up 2 days in a row here, but like it's just selling off. I was afraid to outright buy puts on AMC because they're very expensive. So I sold the calendar spread. Meaning I bought puts long dated and sold puts short dated, and at $30, which was a long way away back when AMC was at $50 when I did it, and it's like going down so fast. I'm not really in profit yet. I actually need it to like survive for a bit so that this calendar spread can work, but it might not give me that opportunity. But whether it's AMC, GME, or Doge, I think you can talk about all of them together because they're all traded in the same place, right? It's all just Robinhood meme stuff.
That, and you have insiders. You have insiders selling and insiders issuing shares of. It was AMC, right? GME did it at one point, but
AMC insiders were selling like crazy.
And Doge still to this day has 2.5 million per day in miner revenue. If I'm a Doge miner, I'm selling every cent I get every single day, right? And that is not being absorbed by the market. There's no way retail is buying that. Yeah. So, if you're bullish Doge here, I don't know, you're in trouble for sure.
Yeah.
And that's all of retail, right? Retail is just gone because stimmies are over. Unless, I guess, child tax credit, maybe you can count that as a stimulus, but we're not getting another one, I don't think. Are we?
Right. Especially from the macro perspective, you have inflation, you've got the cutting of benefits in many places. You do have some places offering very minimal rising wages and bonuses and stuff, but not any to the point that it matters. There is a real macro issue with, where is retail getting the rest of this money right now? Housing costs are through the roof, used cars through the roof. You're going to need either those things to correct for there to be more capital to spend in investing. Otherwise, a lot of these people are living hand to mouth. And then you have, things like Wells Fargo cutting off personal loans and things like that. It's just a lot of, the New York reverse repo is in overdrive. You just have a lot of liquidity getting sucked out of the market right now.
It's funny, the reverse repos was talked about so much alongside the volatility surge in February 2018. And now it's like back in overdrive and nobody ever talks about it. It's just like, oh, yep. There's a lot more billions issued over here. No big deal. But like something's happening in the back end there, isn't there?
Yeah, I mean, the banks are saying we'll give you this money back because it's not worth it for us to hold it at this point. So the reverse repo is cranking along. They raised the limits, but they changed the fee structure, I believe. I'm not an actual expert on that. So it's, that's something to keep an eye on. And then you have all these other things that go on. The macro pictures, really drastically changed in the last 2 months.
Macro.
Oh, also, can we? Yeah, the macro economy. Can we also talk about the fact implied volatility keeps compressing too? Skew had a good tweet about that. It's down, I think, in the 70s, I think.
Yeah.
Implied volatility may still continue to compress, right? Like it's July 15th. One of the things that I wanted to bring up in terms of the derivative market changing structure is here's a little alpha drop. Those quarterly rollover weeks have, even back in the OKX days, even before CME, they've always been pretty good, right? They've been pretty high volatility. You could trade volatility during those times and you could do pretty well. The question I have is for this September quarterly rollover, are we going to see a change in how the rollovers are structured in this market without so much of the leverage built into the Chinese market that's always been front and center for those types of trades? Like, will we compress into that end of September and then nothing just happened, which is not really something that we do a lot. Just so you guys know, I always tell Josh, this is the best chart in crypto. You could literally just look at this chart, not know anything else. And then once you realize the directionality of the quarterly contract and just trade that, you probably are retired right now. You probably.
Except for me and Josh.
It is a good chart for sure. One thing, do you think the West will pick up in volume if the East is gone?
Yeah, I do. And I think, so listen,
not even on a relative basis either. Just like people saying, all right, China's out of this market. Like I find it healthier now, you know?
Yeah, absolutely. There were real concerns that this was a, Chinese led and Chinese controlled project, right? I do think if you're going to see, I'm not a Bitcoin maximalist, but if you do see investments in terms of mining in ecological, smart ways, like we're doing, the excess power that's not getting distributed yet, nuclear power plants or hydro plants. Those are investments. The US dollar can actually strengthen. That's the thing. Bitcoin sort of does compete with the USD, but if they make it a national security imperative, it actually can strengthen the USD. So yeah, I do see that it's very possible that Western investment could absolutely climb and climb very rapidly once China gets completely flushed out of the system.
And we had talked for years about BitMEX winding down, Tether winding down, and like China derivatives winding down, eventually leading to the higher probability of a Bitcoin ETF, not necessarily like a slam dunk, but so we're well on our way in that respect as well, aren't we?
Yeah, exactly. Like if you read any of the ETF denials, right, they always talked about these unregulated markets, especially on the derivatives side, that quote unquote led market moves that weren't regulated, right? So they were basically talking about BitMEX. BitMEX goes down. Arthur had to die so that we could live. But now it was then picked up by Bybit for a little bit, right? But that's now done. KYC, their ROI has basically been slashed into a third. Now it's Binance Futures, right? If you leave SIG trades up, you can see which markets are moving first most of the times. Binance Futures probably is going to have to die before we get the ETF, right? So now you're seeing the world economy cartel go after Binance onion layer by onion layer. And you probably get your ETF, and Grayscale probably converts when they have a really good control over the derivatives market.
Yeah, I think Grayscale converting is definitely one of the first ETF approvals. I've heard people say they're probably going to come in just a big batch, like they approve half a dozen of them so they don't make any of them a kingmaker. Josh, can you go back to the quarterly futures chart and do a Eli 5 for the chat?
Yes, these are the CME futures rollover dates, and how futures work is they have a start date and an end date. They aren't a perpetual, for instance. They don't just go on forever, and they're not the spot market, so they can get either in forwardation or backwardation, a premium or a discount to spot. And what we noticed like Wolf said, we noticed this, I've got tweets talking about this in like 2016, 2017 probably, but maybe even before that, 2015. We noticed these rollovers on a quarterly basis, and this is biannual too, but we noticed that there's a heavy directionality. And since CME came on board in 2018, that's just been even more the case. There isn't usually a change in the direction in between these contracts. It's pretty much either up or down, aside from March. If Corona never happened, honestly, I think we just moon super early. And I think Corona just allowed us to springboard harder and stronger than we would have in February.
Yeah, I think we might have had to work harder to moon without COVID making all the open interest go away.
Yeah, and so in retrospect, right, this was actually great for Bitcoin. Even though we all basically went to zero unless BitMEX shut off. But and stocks are the same way. I don't think they go as high as they are unless Corona happens. But anyway, so these biannual dates super important, and this is continuing to hold true even with even with CME introducing options, even with all these new contracts. None of that has really mattered too much, and we basically topped, in between these yellow contracts, these biannuals in September. I always say, wake me up when September ends. The same was true in 2020. Look at September. September was a nothing burger, like garbage range, right? And then September's over and we start our journey. Everything starts its journey, really. October, December, January.
All the big money's on vacation, get their kids back into school, and they'll sit down at their desk and decide whether to pump it or not.
Yeah. And the big thing I want to just stress, though, is just remember, the derivatives market has changed in the last 2 months. This may not be true anymore, right? Like, don't go and start playing the volatility trade on the last 2 weeks of September, right? If 5e continues to compress, if 5e continues to compress, it may just, roll over and be a nothing burger. And if that's the case, then we probably have to readjust a lot of the quantitative models that I use, that basically looks for volatility spikes during that instance. Why those things happen, I don't know. There's a Twitter guy, he's a quant, Jam Croissant, with the underscore somewhere in the middle. He talks about it being like a Vanna charm trap or something, but I gotta be honest with you, I can't replicate it. But there is, if you go back and you look at the volatility in those weeks, if you were long volatility those weeks, more often than not, then you made money.
Yeah. Go ahead.
No, so I was just gonna say, so that's futures. I talk about that every week, all day, every day.
AJ,
I just wanted to mention
real quick before you get to this. AJ asked about the Grayscale unlock affecting us. The biggest unlock is 16,500 BTC apparently, and I agree with 19,44911. Grayscale unlocks are probably pretty directionally neutral right now, just because. The money being unlocked would have to sell at a discount. Why would they want to do that? So if they have any long bias whatsoever, then they would sell other coins and not the ones that are at that larger discount, in my mind.
Yeah, totally agree. The only people who are in trouble are the people who borrowed BTC to try to capture the premium trade.
Right.
But most of those people have already been flushed out.
Yeah. If they were leveraged to do the trade, then maybe. That's what probably created the discount to be so extreme as you're just mentioning there, right?
Cough, BlockFi cough.
I love it. And yeah, 3 Arrows was one of the larger holders of GBTC, but I think their stuff's been unlocking for a long time. And Sue even said on a Twitter space that he himself thinks it's neutral. And if he's one of the larger players, then, as long as he's being somewhat honest there. I just don't see, it doesn't make any sense. If you're going to have any long exposure whatsoever, or even if you don't, there's just better ways to hedge it out. If you want to be neutral, than to sell something that's at a significant discount, when a more natural discount for GBTC might be 6% for a structured product. So, because many of them with those higher fees and structured product setups, they can carry a discount to NAV, but when it's at a 12% discount or something, it's just a little more extreme than it needs to be. So you just would want to wait until that's more in your favor.
Unless you think it's just going to die, right?
Yeah, but it's not. It's going to get converted to an ETF, as Wolf was just saying.
Well, I guess that's how much pain can you take,
Yeah, but most structured products, there's not a huge estimation that it's the entire makeup of the product is going to change over the next couple of years. So it makes more sense to carry that 6-8% discount because it's going to be there forever. You're going to have that fee on it forever, so it kind of earns that discount. Whereas if you think, I might have to pay 1 or 2 years of this 2% fee, it really doesn't need to carry that large of a discount if the expectation is that the product itself is going to change fundamentally when it converts to an ETF and be instantly arbable. Maybe it can change the fee, although I heard these trusts, the way they're structured, it might not actually be able to change the fee. But point still remains, the structure of the product is going to change as soon as ETFs are approved, and that'll surely be within 2 years.
Yeah, I just want to clarify. I don't know for sure 100% they're going to convert, but that's their intention.
Yeah, well, and I'm saying that on my own. Like, you know, everyone I've talked to, like, it's one of the most reasonable routes forward. So
they're certainly hoping so. But I'm just saying, everybody's got a price, right? You know, at what point does Barry have to step back in, like they did with ETC, and start buying their own trust, right? Just buybacks for that sort of thing. This thing is still going to negative 30+%. BTC is approaching 20 again, and ETH hadn't been holding at negative 10, but here we are. So that to me is not bullish for the spot markets, just based on sentiment alone, you know. And this GBTC chart looks like it's headed to 15, which would be whatever that would be on spot markets. But
it would be
this
bad.
thing just keeps melting, you know. It just keeps melting. It looks terrible. Looks really bad.
Yeah.
I wanted to mention Tether real quick about there haven't been any issuances since China got kicked off, obviously. So there's a clear correlation there. And the Bitfinex people of the world love to point to this and say, see, guys, it's all a scam all along. Of course, we're going down. We're not printing fake tethers. Sure, I guess, but we're also removing, you know, an entire country from crypto. So one thing that is continuing is USDC issuance, which is just nonstop, can't stop, won't stop every single day, multiple millions, just crazy issuance.
Yeah, and just to make sure that the people who don't know, there's a corporate plan that Circle has where corporate entities can get a pretty good yield off of their fiat deposits. So that's why a USDC can print but be a very noisy indicator, because that money may not actually hit the ecosystem. They may just be farming yield with their fiat.
Totally. And like, that's why Curve, TVL is increasing, Aave, any of these lending and borrowing markets, Comp announced that crazy yield as well. I hesitate to be bullish on rising TVLs there because it's not crypto really. It's just stablecoin stuff, right, Brian?
Yeah.
Mr. Flip Metrics.
Yeah. I mean, it can be both. I don't think protocols being utilized is necessarily bearish. You know?
No, but it's not like they're not buying USDC to like onboard into.
Yeah, they don't BTC and ETH don't have to moon for them to take advantage of a DeFi protocol that offers yield.
Right.
So that's certainly true. I want to point at the legacy weekly close that it looks like we're pending here to have. Doesn't look good. You know, like as a weekly candle. I just think this whole market in legacy needs to calm down. Like, it hasn't had a worthy dip in a long time. A lot of people are calling for some degree of correction finally. If this breaks down, we don't even have to like speculate whether it will or not. If it breaks down, I cannot imagine this being good for BTC and ETH. If there's a meaningful correction of, say, like 5%, much less 10%, which is maybe a 20-week moving average test, which would still be very bullish. That is another, 5% from here for the S&P. If it loses that, like say it goes to its 200-day moving average or something completely reasonable and relatively normal, that would be the type of catalyst that could break us out of this crabbiness on Bitcoin, in my mind.
Yeah, for sure. To the downside.
Yeah.
And we talk about DXY every week, and it just continues to look better and better. You said 1 or 2 weeks ago you think it's going to take a while to break up. I think it's ready next week. Like it's a stupid chart, but it doesn't necessarily make sense. But based on technicals, it looks great. I want along this all day long.
Yeah, that's the weekly. The daily looks pretty good too, in my mind. It's consolidating, looking like it is interested in breaking out. Had a perfect retest of the 200-day. We talked about all this as it occurred, as possible strength. I don't think it's going to last forever. Like, I think if it does break up further, it'll find resistance up here at 95 and stuff, and then you can continue sideways, and maybe that'll kind of give you an opportunity to be long Bitcoin again.
Yeah, I don't see a world where the DXY is strong and BTC is strong, you know?
Not for like prolonged periods, I don't think. But
Like
yeah.
we think BTC is an inflation hedge. Yet here we are at 8% inflation. You wouldn't know it, you know. You wouldn't know it. It's definitely more a risk on play than inflation hedge, right?
Yeah, it seems to have been acting that way.
And
Wolf,
silver.
what thoughts do you have on that?
I've got nothing.
Okay.
Silver. The ascending triangle on silver doesn't look so hot, but it's hanging on by a thread for sure.
Yeah, I don't
know. I'm just really worried about Dixie breaking up, and I worry for crypto. I weep for crypto if Dixie breaks up.
WTI also, Josh, we had talked about this level that I've had for a very long time, just because it played off of it at the highs and lows, even though it's in the middle overall. It marked the high of the 2018 range. WTI is rejecting off of that. So oil might be coming back down to reality a bit itself, just as another temperature check amongst all of this. And then the one that, we've loved to talk about is lumber, which tracked, coincidentally or not, whatever, lumber tracked Ethereum pretty closely. And man, like this is one of the ugliest.
What a weekly candle.
Yeah. It's good for me. But you got to imagine lumber prices will start coming down for the actual dealers and, home builders, maybe bring down pricing a bit on the tail end of that stuff. But that's a full pump and dump there. The red line is the yearly open. So it's more than retraced the yearly open pump. This went to 1,700 plus, and it's back down to 550. So it seems like truly, everything mooned when we after we got our fear out, we bottomed, shut down, and then everything mooned, and then the reopening trade has totally played out. Marking the top with everything supposedly getting back to relative normal and being open and stuff. So yeah.
I think on this BTC stuff, the best we can hope for is bullish TK cross down here, so long as we don't make lower lows. And then we start to look more and more like late 2018, was it? Was it back here? Where it took a long time to eventually break up into April. April could be October. Like as far as this entire quarter just doing a bunch of nothing. That whole September sideways thing. Very possible that we do that, assuming we don't break down, this on-chain stuff. I tweeted about it today because I've been super bearish and I'm still holding crypto, and Wolf gives me shit for that. And he's right. I don't talk my book because sometimes I do stupid stuff like that, but, everybody's coming at me with this on-chain stuff so bullish, and I just don't see it. Transactions are down, active addresses are down. I don't know. Like, what are people looking at that they're like, oh yeah, this is super bullish here? It's just not
mean reversion or some kind of like short squeeze or whatever. But the problem is
but specifically on-chain analytics.
Yeah.
Willy Woo or Clementine. I don't know who it is. Like, it doesn't matter. I'm not like calling them out. I'm just saying like, there are people out there who think on-chain analytics are bullish right now. The only thing I can point to is that hodl wave where we're not seeing old coins sell. We're not seeing holders unhodl and convert into sellers yet. Other than that, there's nothing. I just don't have a reason to be bullish on anything right now. Every single moving average looks abysmal here.
I think I want to be bullish, but I'd be more bullish if we broke down. Kind of like you talked about with, COVID being like a spring. If you get capitulation, it can give you a hint of true bottom, whereas we still haven't made a new low from 2 months ago. Like when we had that first big dump in May, we made the low, and we have not swept that low. And if we swept that low, saw capitulation, went and got down to the mid 20Ks, like that would give me a lot more confidence that we can go back to the 40Ks. But currently, I just feel like the goal of the average person is if they get a move up, they want to be able to sell into it, right? And like take their profit that they didn't take in time earlier on the way down. So I think
100%.
The way to get a more sustained move is have them capitulate on the bottom side, and then they're not like your immediate sellers upon a small pump.
Yeah, I mean, I'm holding ETH from 24 and holding BTC from 32 or 33. So yeah, I can't wait for a mean reversion to sell higher. And on-chain analytics, something else to say is depending on where you look, it looks different. Look at Glassnodes, look at CryptoQuant, look at ByteTree, I think it's called. I'm not going to talk crap about anybody specifically in the chat here, but yeah, I read on-chain analysis every day. Like that's part of my job. So again, I don't see the bullishness here. I really don't. Looking at CryptoQuant specifically, this is exchange reserves for BTC, and yeah, they're declining slightly, but it's not like they're in this mega decline like they were in the accumulation phase of early 2020, that's September. Again, look for this type of stuff into September 2021. You know, if we're in September 2021 flat while exchange reserves are declining at a rate that they were in 2020 September, then we can get bullish on sideways nothingness. But this, what is this? This is nothing, right? This is, I don't know.
Yeah, I think...
and I'm not just being like contrarian. It's like, guys, if I was bullish on on-chain analytics, I'd have reasons to be, but there just aren't any that I'm seeing. So anyway.
I think Willie's primary justification, since you brought it up, thanks to JPD that copied some of it into the chat, was basically that, what do you call it? Long-term holders are reaccumulating, basically, absorbing the coins that are being sold off by China and whatnot, and that exchange outflows are signaling consistent buying demand. So somebody's absorbing these coins, but that's always going to happen. And what happens when they've absorbed all the coins they intend to absorb, when the sponge is fully soaked? And what if they're still selling inventory to be done after that? That's how you get the capitulation, right? Like, I feel like both can be true, you know?
Right. When the dip keeps dipping, either people stop buying, they've accumulated what they're going to accumulate, or they say, "Wow, I was wrong. I'm gonna be a seller instead of a buyer on this dip because I'm mega wrecked," right? Like stuff like that. This is the HODL metrics I was referring to. And it doesn't show any spikes in older coins being sold. It shows the contrary, with an extreme decline in older coins being sold. So the whole hodlers are still hodling strong. There's no like.
And I think that's one of his justifications for why it's bullish. And I don't blame him in the sense of like long term. I don't think that's problematic to say that, right? Like if long term hodlers were selling, that wouldn't be great. They're just like, but they're not. Why would they at a 55% discount off the top?
Yeah, I don't think long-term hodlers not selling is default bullish. It's
Correct.
Not bearish, but it's not default bullish.
And that's what I'm getting at as well.
Yeah. And we can look at MVRV, Puel multiple, all the other stuff. It's still in the middle of the ranges. It's not telling you this is a great buy here based on historic averages. If we go to look into Bitcoin.com, not a sponsor, but a great site for this stuff. Everybody was celebrating the Puel multiple, spiking down when mining was collapsing. And it's like, yeah, of course, issuance was at an all-time low. Inflation was at an all-time low. And once that normalized again, we're back into this middle of the range, right? The buy zone is all the way down here. And that's a significant decline still from where we are.
Can you look up hash rate right now? And we can talk about that, see how it's recovering, if it's recovering. But in the meanwhile, with the hash rate going down so much, it went down a lot, and therefore the difficulty adjustment occurring, profitability actually went way up for the miners that were left. So Western miners are making hand over fist on keeping their mining equipment up because so much of the Chinese hash rate came off. which is not bullish, because as that number goes down, the break-even number goes down, then you're happy selling 30K if your mining cost is 13K and it used to be 24K, right? Like you're making a nice profit there because it's just cheaper to mine your coins. So that's not been a good thing. Like, you can't be bullish on hash rate going both directions.
Right.
It may be long-term bullish to pull centralization, to make it more decentralized, the mining effort, to get more mining hash rate out of China might be long-term a good thing, but it's not near-term bullish because it just makes mining for everyone else super profitable.
Yeah, and some miners hold, like, not all miners are rational. If it were me, I would, like Doge, I'd be selling everything I get every day. Some miners are BTC maxis, or they're hodling, and then other miners have to pay for overhead costs, right?
Yeah.
So they just do what they need to do to sell, and difficulty is still declining. So yeah, hash rate has bounced slightly, but since the last difficulty adjustment, we're still bleeding hash rate, and this is gonna adjust in a day.
Just also one thing that I haven't heard discussed really anywhere is just changes in the COT report on CME. Remember, a lot of the Chinese miners were hedging their positions on CME because obviously they pay their bills in fiat. So it was good to have a fiat denominated or USD denominated hedge. When that hash rate disappeared, that will have an influence on those COT reports, right? So just keep that in mind when you see changes in those reports, that there was, an actual external factor that caused those people to take off some of those hedges.
Yeah, and that all declined. Those shorts declined, at least in hedge fund shorts, but shorts everywhere basically declined on the COT report starting in April into May. So somebody knew something, right? Plus, we were basically at the top anyway during that point in time. So,
Wolf, you talked earlier about your expectation that we could have this volatility squeeze, IV reduction, implied volatility reduction over time. Do you expect like miniature spikes to, get people trapped one direction or the other, or is it just like a nothing but compression, no mini moves anywhere?
No, actually, that's a great question. So for those of you who were trading in 2018, the BART was the meme, right? So the BART or the Mesa top table, or whatever you want to call it.
BARTs.
The first iteration of the BART was either the Judas or the God candle straight up, basic sideways, and then, resolve, in the opposite direction, or, continuation if it was down. It actually evolved a little bit where the algos got a little bit more sophisticated and started running the stops on both ends. So it would break like low time frame swing lows and swing highs, which was very, very tricky. People would think it was starting to break out, they'd get trapped, and then we'd go back into this like 7-day sideways again. I actually do think that you'll see that more sophisticated trade if that does start to happen again, where the stops will get run on both sides. You may see some attempted breakouts, and then the breakouts fail almost immediately. So I think that's actually a really great low time frame scalper trading point that you bring up.
The double lightsaber move. Gosh. Dynasty asked, how did I forget about the BARTs? I blocked them from my mind. They were pure pain. I prefer trends.
Yeah, we were BARTing a lot, even in late 2018 during that accumulation, whatever you want to call it. That's why I think you just have to zoom out. I'm not a scalper. Wolf and I know some really great scalpers, but for me, that's just not what I do well anyway. So I just kind of ignore it and look at the high time frame, high data capture stuff.
On the same note with IV, Wolf, do you think that we're going to find a capitulation and then keep consolidating as we grind back up, or do you think we're going to hold the line here around 30K and really take our time on going down?
Yeah, it's a great question. To be honest with you, I don't know. For a lot of the newer traders, a lot of people think of trading as binary, up or down. It's really probabilistic, right? So Even if I tell you I have a slight lean, like say 52% down, if you're not, expressing my edge over and over again, that number is meaningless to you. It's only useful to me if I express the same edge over and over again. I really don't know, to be honest with you. There's basically infinite bid below 30. We saw the FTX order book. If you have your heat maps up today, they had a bid that was basically pushing the book up today. And then SIG Trades fired off a $22 million sell after just moving like $100. Just absolutely ridiculous. So actually, I really don't know. It's a great question. It's actually one thing that from the last Ledger cast, Josh and I debated. He was saying if we did a close below 31, he would be a little bit more bearish. But there's so many wicks on that 8-hour chart, even below 31, that it just seems like a spot that you may get trapped if you are going to continue to keep compressing. So you couldn't open a short down there. I just think that you have to look for really good entries and exits, and it really depends on your time frame as a trader. If you're a long-term trader, as we continue to compress and T increases, T being time, you want to play volatility. That will be the easiest trade to make. That's just how these things resolve. You can buy spot, but if you buy spot and you get caught, you better be disciplined about cutting, or you better be willing to, just DCA in all the way down to 20K or whatever we may end up going to. If we end up going up, of which is also a strong possibility bouncing off of 30, if we compress all the way to September and we have a strong Q4, congrats to you. You're going to be doing very, very well, and you're going to make a lot of money probably in a short amount of time.
Yeah, I've got, I think where we are now would make for a very cheeky crab bottom. So like if we stay in the range, because it looks so droopy and disgusting, so but it's not technically broken below the range, and retested those deepest wicks sub 30K.
One other thing too. So with halvings with BTC, right, the halving occurs and then there's actually not an instant shoot up, right? There's like a 4 to 8 week or maybe 6 to 8 week either sideways compression or drift downwards after a halving before the cumulative effects of less of a security budget being, or inflation or issuance, whatever you want to call it, being sent into the system has to get absorbed. And then, those cumulative effects start to pile up and we start to grind upwards. EIP 159 is coming, we think it's not going to come. Yeah. So now it's August, right? So maybe 6 to 8 weeks after August does time out pretty well with a pretty good Q4, right? So that's one narrative trading plan that you can keep in the back of your head where, let those cumulative effects of those fees getting burned and, the issuance being lowered, not being in the system, let that accumulate. And then maybe we start to see the grind up as the capital coming into the system starts to outpace issuance.
Yeah, I think if Bitcoin continues to crab here, it just prolongs the pain of sideways before we make a decision. If it does break down, I don't think that personally that this yearly open will hold again, which essentially served as both the first and second wick bottom when we drove sub 30 both times. And I just don't think a third one would hold to the downside. So I think that would put us into those 20Ks and then, regrind somewhere down there.
The volume profile node is very scary.
Yeah. There's a gap there and they're all the way down to like 24K. Let me see if I can turn it on.
I can pull it up.
Got it. Yeah. So it really goes all the way down to 20K with a.
This is stamped. Let me pull up a real exchange.
Tiny. I'm on an index.
Okay.
So it's all the volume profiles here, 30 and above. And then there's a little bunch at 23K and then prior highs at 20K. Yeah, so if it falls below there, there's just not a lot of activity that's happened there. However, I personally don't think that 20K is going to be the answer. It feels too obvious, right? That we just spiked to 19.6 and then, new bull market. I feel like somebody's going to have to chase or feel the pain. So I feel like 24K is my optimistic type, 24, 27, something like that. Never gets to people's buy and then they have to FOMO on the way up. Or what if we actually test deeper than 20K? That would be very painful.
Well, Sailor's average is what, 24, 26?
Yeah, but like his is such a long-term thing. It doesn't matter.
Yeah, I know, but people are going to be seeing that, looking for that. I could see a spike to 20 and then wick back to 24. I could see that happening.
Yeah, my like big thing, I guess we can say for the rest of the year, there's enough time, is essentially that both the red lines on my chart are going to get tagged. So like both 42 and 24 would be kind of my ideal tag both. I just don't know which is first. You know, it's like this stupid crap has to resolve itself before we find out which is first. And I've got an alert, 33,333. $33,333. That's my current alert zone, because I think if it can break above that, maybe that's where the like the move upward goes to. But the risk reward just isn't as good if you go that direction versus if you go down to 24 or something and I can confidently buy, but I think we're going to 42. That's a much bigger win, right? So that's why I think dumping is bullish. Just because I like that. I like the trade of going from here to here a lot better than the trade of going from here to here. And I'm probably not going to do the short version where if it goes here first, I'll trade it all the way back down. I'd have to be in cash. You know, I don't think I'm going to short that. So that's my 2 cents. Dumping is bullish.
That's fair. I mean, I like the mean reversion play. That's why I'm holding spot. I just don't have a lot of confidence in it day after day, as we're just like drooping over and over and over again. And ETH, we haven't really talked to ETH much, but ETH just keeps getting, it's like there's people are finding ETH under their couch cushions to sell. It's like nonstop, right? It's like 20% just uncasually down, right? We're down 15% from a couple days ago, and we wicked up, immediately got smacked down again, down 10% from the wick. It just doesn't end. I like your capitulative sigh there. Down to 6 to 800 would be ideal for sure.
I don't think it's actually going to go that low.
Well, I filled it in for you because, you know.
That takes it back to about 1,200 for me. I think 1,400 ETH. I'm a strong buyer, pretty happy buyer there. It's below the 200 day. The only positive you can say is it's making a higher low versus June 25th. But it really needs to clear like 2050, 2100 for me to think it's going to scam upwards to 3K again or something like that. It just, yeah. The weekly also, like we've talked about this on the show many times, my belief in the 20-week moving average. The weekly versus USD, it tells you to get out. It just says like, get out of there. Don't touch it. And actually this one tells you it's not confirmed until it's over like 2,400 to the upside. So it's just, I don't know. I finally had to just listen to my system. My system tells me to be out, and I hate it. Like, I don't want to be out. I want to be in. I want to be bullish, but my system tells me to be out.
If we look at the 200 week for VTC versus the 2-year MA multiplier, it's basically between 13 and 20 tells you to get back in, which is a massive range, obviously, but we're talking like high time frame.
Right.
13 would be the absolute pico bottom. If we go below 13, that really has never happened before. As far as the 200 week, we've bounced on the 200 week. Anytime we've gone down to those levels, eventually, either in 2015, it took a while, but anyway. So for ETH, 1300 is the level to watch as far as DCAing in. And then I like 6 to 800 based on that pitchfork that I've posted like
the 15,
over and over again.
The 1559 for 1559 meme seems pretty strong to me.
Yeah, I should pull up that poll again to see what people were saying. I think they were giving me crap for it at the time, but it feels more and more real.
$1,559 ETH.
Yeah, before August.
Yeah, I'm fine with it. Sometimes you gotta wash out the new blood. Well, if you've been through a lot of cycles, do you feel like the new blood's been washed out sufficiently enough?
No.
Yeah, I think we're all in agreement with that.
Yeah.
Doge is still 17 cents. I think SafeMoon is still a $2 billion market cap. Like no, we're not even close.
Unfortunately, Gaps don't always get filled. I agree with you there, Shanto. Gaps don't always get filled. I don't think it has to go all the way to 20K or anything like that. I don't think ETH has to go to $600.
We're talking if this then that. Everything we've ever said really
probabilistic
is all about if we break this low, we're going here. If we break this low, we're going here. If we mean revert, we're going here. It's all if this then that.
Yeah, also not for nothing. So Josh and I always fight with each other about pitchforks. I don't like pitchforks.
Woohoo!
You know,
Josh, you didn't tell me this.
But this ETH pitchfork I do think is valid, and it scares the crap out of me. But here's the thing. Time increasing, the pitchfork catches up, right? So us just compressing is a good thing sometimes, right? Like when Josh first posted the ETH pitchfork, it was 600 at the mid band. Now I think it's like closer to like what, 850 or something, or 900. Like, you know, as long as we keep compressing, like the dump probably won't need to go as deep. So that's actually a good thing. So listen, just because you see a pitchfork like that and it's like, oh my God, the mid band is so far away. Listen, compression is good. You know, it'll allow the chart and a lot of the moving averages and oscillators to catch up a little bit.
Yeah, I agree with that. And ETH losing the 200-day, speaking of the 20-week, you know, if ETH loses the 200-day, I had some legacy people reach out to me saying, aren't you bullish now? We're back to the 200. I'm like, is it going to hold? You know?
Yeah.
So it doesn't look like it's going to hold to me. I don't know. Like it looks like, you know, we W'd below the 200. We bounced the first time at the 200, but now the third attempt just looks feeble to me.
To your point about moving averages catching up, when we made the first bottom in February 2018, we went to 5,900 or something. The 200-week moving average then was at 1,750. By the time we actually bottomed, it was at the 200-week moving average, but it was at 3,100. So that moving average had almost doubled in the time it took us to like fully capitulate to it. So similarly, we could dump quite a lot. We could go to 24K and then like crab some more. And by the time we like bottom, if we have a longer bear market, the 200-week moving average might be at 20K or something. And, you know, that's ends up once again being like how we tag the bottom is like go revisit it one more time. That's the bottom, but it's at 20 or 24K, not 13.8, which is where it is right now. And this is the only tool. The reason I like it so much, this is the only tool in really all of crypto that's called more than one bear market. It's in fact called 3 if you count COVID, because I consider that a win, considering BitMEX went to 0, kind of dragged price down intra-week, but on the weekly it still kind of saved the 200-week there. So the 2015 bear market bottom, the 2018 bear market bottom, the 2020 bear market bottom, the 1 week bear market, the 200-week caught all of them. There will be, I do not care, even if it doesn't last, which would be very scary, but there will be buying demand on that zone if we catch up to it. But it probably wouldn't even happen until like $20,000. You know, it's got a long way to go to catch up.
Yeah, so if you're the most passive investor, that's all you're paying attention to. You're putting bids there and you're changing them every week, just moving them up slightly.
Yeah.
And you're doing something else, right? Like that's the best way to not pay attention to this market is just put bids on support that's held on high time frames and just ignore it.
When I was showing that lumber chart earlier, that's also actually one of the reasons I thought, or I think that lumber is probably going to bounce soon, which makes me think it does give me some pause. Like, will other stuff follow it? You know, or like, you know, is it just like a sign of what could happen in other markets? You know, just none of these things act totally independently. But yeah, so lumber is almost right at its 200-week moving average, which is at 518 on the continuous futures chart. So like it looks like it's completely dead, but you know, sometimes something this oversold has to bounce, right? It can be a dead cat bounce. It could be pathetic on the long-term sense, but I bet you'll find some buyers at this 200-week moving average, you know?
Yeah.
No different for if Bitcoin gets down there. All right. What do y'all want to leave us with?
I don't have anything good to say. Just focus on you, focus on not you specifically, but anybody listening. Focus on your trading plan, focus on your time horizon. If you're bullish in the next 5 years, if you're Michael Saylor of the world, what do you care about anything that happens in the next 6 months?
Fair enough. Wolf, what about yourself?
Just to echo Josh's sentiment, depending on what your time frame is, if you're a high time frame trader, definitely stay the course. And then I had some notes of things I didn't bring up with OKX and Huobi deleveraging. Are we seeing a slight rebirth at Bitfinex? Question mark. I'm not sure about that. Their cold storage has grown a little bit. As a tangent to that, you're seeing that short whale keep entering and exiting positions over and over again. He does seem to be influencing the market enough at this point that it's a slightly strong signal. No, I don't think it's the strongest of signals, but it's a slight signal. For Willie Wu's talking point about parabolic user growth, I would just say check the Joe Chen mempool page, put it on a high time frame, and the mempool is just freaking dead. And that's even with the hash rate fluctuation that we've said. And here's a slight little alpha drop since we haven't had any Tether prints recently. The Tether treasury address is actually up to 700 million. So before you actually see a new print, you're likely to see the Tether treasury get drained first. So if you're looking for some type of reversal signal that's on chain metrics, that would be the one that I would look for. You would want to see the treasury not burn that money, but you would want to see it leave the treasury and go back out into the ecosystem. That's it.
That's interesting. Yeah.
Why do you think they haven't burned that yet?
I got to be honest with you. It's one of the $69 million questions about Tether that I can't answer. I don't know why it doesn't function like USDC. I don't see why they leave so much authorized and they don't burn in the same fashion, but it seems to work for them. I think they've said in the past it's for security reasons because of the key holders. And they did have that one problem where one of the key holders, it seems like, was potentially issuing transactions that they had to freeze. So I kind of can buy the explanation, but I have no idea why they don't burn.
Yeah.
For myself, I had to just kind of come to terms with what the market told me. And I try to follow a pretty simple system. It may be stupid. It may be too simple. That's fine. But I either want to buy a level that feels like people have capitulated, or I want to buy strength. On ETH, my level is recapture of the 200-day. On Bitcoin, it was get above the range. I hope that this level for ETH from, where we really bounced from in February is the one that could win. I just need some proof of it. I'd rather cost myself a little bit of money to have a higher confidence trade when the time is right. And in the meantime, I maintain my buying power and carry on in life. And I think there's a lot of good trades that will come out of it once this does reverse. And if you look on my watch list here, it's like Bitcoin's just flat, barely green. Everything else is red. So or almost everything else. I don't know what this is down here. Atom. Okay. But unless you catch the random ones that move, for the most part, I feel like we're just seeing dollars slowly come back out of altcoins into the stuff that people can find liquidity with in Ethereum and Bitcoin, and also just generally see dominance tick up as, like Wolf mentioned earlier, some of these longer tail alts especially start to taper. There's not a great reason to be in them, especially if you need liquidity to get out when you're invalidated, because they're all just more reflexive of the same concept. So if Bitcoin and ETH confirm up, or confirm even to stay in the range, like you feel like they'll be there for another week or something, then yeah, sure, you can go down the list and start trading other stuff that's reflexive to the upside. In the meantime, though, I don't know, just don't see it right now. I'd love to. I love being a bull. We just need to go down so that we can be more bullish. Should we leave it there?
I guess so. I mean, one last thing is a lot of these alt charts are showing potential for diagonal inverted head and shoulders. So I'd watch for that. Just like the DXY chart, actually. It'd be interesting if these act like the DXY eventually. But anyway, that's it. That's all I got.
Got it. Thanks, everybody, for being here. We appreciate you. Have a great day. Thanks to Token Sets for being our partner. Asset management for a DeFi world. Go to ledgersas.com/sets to check it out. Thanks, Wolf, for joining us, making things interesting. We'll talk to everybody next time.
Monuments crumble in the blink of an eye. The easy river has just run dry.